So for those of you who don't need the money now, then I would take that cycle, the down cycle, with utter joy and add. Expect to see an 80% drawdown. Maybe it's less this time. Maybe it's more. Solana was down 97% this time. ETH was last time down 97%. And embrace it, because every time you buy those lows, you're going to 10, 20, 50x, depending on what you're buying. Just of major coins. Right, so it is a huge wealth generator. If you imagine,
many investors are looking to specialists for advice on navigating the market's complexities as the financial industry continues to change. Raoul, the CEO and the founder of Real Vision, is one of experts, renowned for his profound understanding of the cryptocurrencies. We explore Pal's different perspectives on the present situation of the cryptocurrency industry in today's video. Investors are curious to know when it could be best to withdraw profits and stay clear of the traps of another severe crypto winter, which might result in sharp 80–90% drawdowns now that the bull market in cryptocurrencies is well underway. Pal claims that we are moving from the crypto spring to the crypto summer, indicating that asset values have more opportunity to rise before reaching this cycle's high, which is expected to occur around 2025. Raoul highlights the value of having a long-term investment strategy and supports staying in the market through both highs and lows. In a video published on his YouTube channel, Raoul the Journeyman, explores the possible benefits of taking a patient approach, drawing on his personal experiences, including his early Bitcoin investments. He emphasizes his confidence in hanging on to investments until at least 2030. Let's hear what Raoul has to say.
Let's talk about the psychology of when to take profits, the cycles that we know are there, and let's just think it through together, because it's going to vary for everybody, and that's a key thing. So as we know, crypto is very cyclical based on this everything code thesis that I've built, which is there's a debt refi cycle that happens every 4 years because everybody reset their interest rates in 2008 to zero and then made all the government debts in around 4 years, 3 to 5 years. And it's created this endless cycle, which happens to be the same as the Bitcoin halving cycle and the US presidential cycle. So we're faced with these cycles. And out of 3 years, crypto is the best performing asset in the world. In year 1, crypto spring, year 2, crypto summer, year 3, crypto fall, and macro spring, summer, fall. And then year 4 is the worst. And the worst is what scars people. And people want to know how to deal with this. How I think about it first is you've got to establish what are your goals here? What is your time horizon for your investments? So if you're saying, my big macro thesis is this space goes from, let's say, $2.5 trillion today, to let's say 10 to 15 trillion at the end of this cycle, depending how big this cycle is, to 100 trillion by, let's say, 2032. So we've got the largest wealth generating macro trend of all time, and it's still in front of us. Yes, the early days were super high returns, but it's still super high returns. So we don't want to fuck this up, right? We want to capture that. So a lot of people start thinking, well, should I trade out in macro crypto fall, try and sell that peak and then buy in the bottom, and then I don't have to go through the horror of the 75% drawdowns. So for those of you who don't need the money now, then I would take that cycle, the down cycle, with utter joy and add. Expect to see an 80% drawdown. Maybe it's less this time. Maybe it's more. Solana was down 97% this time. ETH was last time down 97%. And embrace it. Because every time you buy those lows, you're going to 10, 20, 50x, depending on what you're buying. Just of major coins, right? So it is a huge wealth generator. If you imagine Solana last year was a 10x in crypto spring. We haven't got to summer or fall yet. We're just transitioning to summer now. So if you've got a long-term time horizon, you will definitely make more money by following that route. Buy the sell-off, embrace it, have cash ready for it. Right now, we're probably in the last opportunity to put cash into the market. So if you've got cash or you're waiting, now is the last chance, because after this, we hit the banana zone and everything goes a bit crazy. And then it becomes unbuyable, and your entry levels, if we do have a bear market, then you're below water. You should not be from these levels. So, or not by much anyway. These are good final levels to jam in as much as you can. Okay. So if you're the long-term person, wait for 2026 and go, yeah, I can't believe I can get more and compound more wealth. Get some cash ready for that and be ready when everybody's panicking. you be the person to stand up and say, I got money. The other route, a bunch of you say, well, I want to take everything off the table. I don't want to deal with the stress of the down markets. That's fine too, right? We all need to understand our own psychology and our behavior patterns. I can't help you with timing the top. I know that it should be, by my work, sometime in summer to winter of 2025.
In the second part of the video, Raoul Pal provides helpful guidance for acclimating to the ups and downs of the cryptocurrency market. He will stress the significance of timing your profit-taking approach, not by price but by time, advising investors to think about cashing in a third of their gains by the end of the year. He contends that by taking this strategy, you may ride the market less stressed and safeguard your living. In order to ensure your financial stability independent of market swings, he will suggest using gains to purchase material rewards like a house or cars. Pal advises those who want to optimize their profits to exercise caution while making excessive bets on extremely erratic commodities like meme coins. Rather, he suggests reserving a little amount for speculative investments and concentrating on large tokens in a well-balanced portfolio. Come along as Raoul Pal shares his extensive method for handling cryptocurrency investments, helping you to take full advantage of this game-changing financial opportunity.
Here's my suggested path for most people, and maybe something I will do this time myself. Is we don't know what the cycle peak is going to look like. We don't quite know when it's going to be. We do know it would be crazy early if it finished this year. Usually the back part of the year after the US election, there's usually a screaming pump into the end of the year. So my advice is use that in terms of time and not price. And take maybe a third off the table for lifestyle chips. Okay, now you can buy your car or your house if you're lucky, or whatever it is, or some extra savings, right? Take some money out of crypto land, put it into fiat world where you live, secure your lifestyle, the things that matter to you. Right, now you've taken all of the pressure off. You've done it via time and not price, which is towards the end of the year, I'm going to take a third off. I don't really care what the price is because it will be up a lot. So I'm just going to take it off. And then now I've de-risked my life so I can now run 2025 more intelligently. So 2025, you can then run with the rest of the money that you've got, the 2/3 remaining, and you can say, okay, I'm going to take some off by about the summer if I wanted to take more off. Maybe you don't. Maybe you just run the rest because you've now de-risked your lifestyle. That's my favorite approach. But what I would have a tendency to do is if we do get a mega pump, the 2013-17, then take another third off when that happens. If it doesn't and it gets stunted, it doesn't matter. You've taken a third off, you've protected your lifestyle, and then you can then buy some cash with that. If you keep that cash, you can buy the dip, or you use it to, as I said, for your lifestyle chips. But this way, you're now ready for whether it stops early. You don't care because you've taken your money off the table, but you're still in the game. Right? That being in the game is the secular trend. That's the most important thing to me. But if it really goes wild, you take a bit more off and you can put it into the lifestyle chips bank. And then you've still got a position. Because if you don't have a position in a secular market, I think you end up making suboptimal choices. So that's how, now you might not say a third, maybe it's 50% for you. It doesn't matter. What I'm trying to give you is an idea of not trying to nail the top, trying to think in terms of time zones and then how much lifestyle chips de-risks your life. Because I think it's too important a trend to this up. So that's the best advice I can give. I will probably do the third off strategy this time around because I've got some lifestyle stuff I want to do. I did not last time, and I was bloody happy with not doing anything but buying the dip. I will absolutely buy the dip in 2026 because this trend is going to keep going. Remember, 2.5 trillion to 10 to 15 trillion. 15 is the pump. The 10 trillion should be normal. To 100 trillion. That's the game we're playing here. Let the cyclicality be your friend. Understand that there are seasons that you can use to your advantage. We are transitioning right now, and I'm talking to you, this is Sunday the 12th of May, I'm recording this. We are just transitioning where we're about to hit crypto summer, and that usually happens June, July of the season cycle. And then it goes bananas. Of course, there will be corrections and there will be sharp corrections. 30, 40% can happen. but it usually goes up into the banana zone from here. That's when you've got to be careful not to lose your mind.
In the end, let's consider Raoul Pal's recommended approach to surviving the erratic cryptocurrency market. Pal notes that even if we are unable to forecast the specific peak of the cycle or its exact date, it is crucial to prioritize time above money. Every year, there's usually a big market spike towards the end, especially after the US election. In order to ensure lifestyle upgrades and ease financial strain, Pal suggests withholding around 1/3 of your savings during this time. By doing this, you withdraw some cash from the erratic cryptocurrency market and use it to fund investments that would secure your present way of life, such as boosting your savings or purchasing a home or vehicle. By using this approach, you lower your risk and may prepare a more thoughtful plan for 2025. With the remaining 2/3, you can choose to ride the wave, knowing that you have already taken care of your urgent necessities, or take further advantage of large market pumps. Remember, the key is to balance securing your present lifestyle and remaining invested for future gains. By following this approach, you can navigate the crypto market's ups and downs more confidently and strategically. Thank you for watching, and stay tuned for more insights and strategies from Raoul Pal. Until next time, happy investing.